Let's welcome in another IT view coming in, this time from Sanjeev Hota of Sharekhan. Sanjeev, good morning. Thank you so much for joining us here this morning. Can you just tell us first about TCS? What do you make of the commentary and the numbers, and Infosys? What do you make of the commentary? TCS commentary was good. Numbers were not that great. Infosys numbers were great. Commentary is not that great.
Hi. For TCS also, if you see, this is the weakest quarter they have delivered in their history. Q2 is generally a strong quarter for TCS, but given that the kind of environment IT sector is operating in, they have delivered a very weak quarter. And as far as commentary is concerned, the commentary was not inspiring at all from the TCS side also. They are still maintaining that they are witnessing pain in BFSI sector, which is the largest sector for TCS, and they are also expecting pain in the retail vertical, which is also one of the biggest vertical for TCS. So, and they are not committed to whether the recovery will be happen in the next coming quarters or not, as far as BFSI is concerned. They are saying that retail might recover a bit in the Q3 or Q4, but given that Q3 is a holiday season and being an election year in the US, I don't really think retail will revive soon. So, as commentary is not inspiring for TCS also. And for Infi, the numbers were good, but I think the more pain will be visible in Q3 and Q4. And that's why the management has rightly revised their guidance downward. And at least management has acknowledged that the difficulty is not cyclical, it is more a structural for IT sector. What we analysts are maintaining from last 1.5 years, that's the issue in the IT sector. Cyclical is not going to go away in a quarter or two. It's more of a structure in form and is going to stay here for at least for next 1.5 years or 2 years.
But don't you think the valuations already factor in that? Valuations have already come down. Yes, they are not great attractive dividend yields play as of now. But don't you think still the valuations have already factored in the structural decline? Yeah, to a certain extent, if you see the TCS from 20 times, it is now trading at around 16.5 times. So, and Infi also, the P multiple has derated over the last 18 months. But what worries me is not the downside. What I'm concerned about is the upside. Whether there could be a market outperformer you can get from IT sector. There could be sector outperformer among the top 5 IT company. But difficult to get a market outperformer in next 8 to 12 months, given that the kind of muted growth they are going to deliver in FY17 and the visibility is not still there for FY18. I still more concerned about the upside than the downside. There might be, you have rightly said that valuation is looking down and that there could be limited downside from this level. But what concerns me is whether there is an upside or material upside from current level is there or not. Right. So basically, what you're worried is not about whether they are attractive or not. What are the growth triggers? Why would somebody come and buy? Right. Right. And, for what makes that change? Only when there is further derating? Only when they become very, very attractive on the basis of the dividends that they are getting? That's essentially the only time when you would come and be significantly overweight on this sector? No, it will take some time because every time IT sector go through a transition phase, it takes 2 to 3 years for growth to revive. And if you see, digital pack is still around 15 to 20% of the entire IT sector. 20% I'm saying more optimistically. If you see for TCS, which has got a head start in the digital space, still the revenue coming out of digital is around 16%. And for rest 84% of the revenue, they are still seeing the pricing pressure or the environmental pressure. So what I see that this pain is not going to go away in next 2 to 3 quarters at least. So I'm not concerned that the valuation will become more attractive or not in next 2 to 3 quarters. So I still maintain my cautious stance. I would like to see more clarity on the revenue growth is going to come or not. The macro level outcome, Brexit, US election, nobody knows what kind of impact that is going to be there, going to have on the sector. So I'm still maintaining my cautious stance on the sector. There are so many issues that are going to play around for the sector, and there's so many issues that are going to get resolved. and I'm waiting for that to happen. So I'll still maintaining my cautious stance on the sector.
Let's just look at all the 4 companies. So we have Infosys giving out numbers, we have TCS. HCL last quarter was fantastic when the industry did not do well. Do you expect that to stand out versus others? Wipro, of course, has been on a declining phase for a while.
No, HCL is also this quarter, we are expecting a decent kind of growth they are going to deliver. But I would not extrapolate a quarterly performance into a yearly performance or FY18 performance. So for a quarterly performance, there might be surprise coming in from HCL this quarter also, but I'm not seeing a value buying in any of the IT sector currently, though I have a buy rating currently on HCL Tech also, but I don't really see a material outperformance happening in any of the top 5 IT company at the current juncture for next at least 6 to 8 months.
Right. So just avoid this sector irrespective of any news, whether good or bad?
Yeah, there could be some kind of trading momentum that can happen in the any of the stock that I mentioned, but for an investment perspective, I still suggest to go underweight on the sector.
Right. Let's talk about the mid-cap IT space. Now, again, we have seen Cyient Limited declaring numbers yesterday. You may not be tracking that name, but mid-cap IT selectively would continue to do well. So that's not a sector where you would just, an all-out sell like you have for the large-cap space?
No, they are operating in the same environment more or less. Cyient has delivered a good number because of the last quarter. It was a bad quarter. This quarter they have delivered a strong number. So as I said, that one quarterly performance will not extrapolate into a very good performance for next 2 years. So that for that perspective, I don't really see any mid-cap companies where I see a very strong growth visibility going forward. Where I see a plain vanilla IT company, I don't really see a strong growth visibility for FY17 or 18 for that matter. One company where I have a positive stance and I'm maintaining that stance from last 2-3 years is Persistent System. Because one thing is that Persistent System, the digital is now contributing more than 50-60% of their revenue. So this one company can surprise on the revenue visibility or on the margin upside going forward into FY18 or 19. So that is one company I still maintain buy with more comfort. Apart from that, I don't really see a comfort buy on any of the IT company, even in the mid-cap space.
Right. As far as, some of the other, IT triggers are concerned, after the election, do you expect markets to find new triggers? That could be some place that you would look at, or maybe the Q3 numbers would only be the next trigger.
Nobody knows because if Donald Trump is going to be elected as the next president, is going to be disruptive for the entire sector, as we see now or we are reading in the media reports. So nobody knows what is the macro outcome of Trump being elected the next president of United States. So I don't have any comment on that. But having said that, definitely Brexit still, the overhang is still there, and it's an unprecedented event that is there. So what is the impact of Brexit on overall IT verticals or IT companies? That is one thing need to watch out for. So Q3 is usually a very weak quarter for the sector, and given that this year is the election year in US, there could be some kind of project delay or ramp down that could happen. So Q3 I'm not very optimistic about, but I'm not too concerned about Q3 per se or Q4 per se. What I would like to see a transition happening sooner than later, and that I believe that is going to take some time. So I'm not going to take any call on quarterly basis. I will wait for more clarity what is happening on the broader environment rather than seeing a company on a quarterly basis.